I don't know if you're a bit like me, but this big, beautiful bill, I really don't understand it so much. But Craig, how does it apply to real estate?
I would say it applies directly at deductions. I think we can deduct. I know we can deduct 40,000 instead of 10,000 with our property taxes.
Mic drop. You got to listen to this episode of Really Mary and find out more about how this can, big, beautiful bill, help you with your taxes.
Really, Mary?
Welcome back to Really Mary. I am Mary Bartos, and here with me I have Craig Couture from Craig Couture CPA. I will do one notice. He is my accountant. So he is amazing here in Southwest Florida, actually sits across from us in our building. I always like to add that little plug. So if you're looking for an accountant, he's your guy. Having said that, today we're going to talk about the big, beautiful bill and what that means today to, you as a taxpayer.
Yeah,
So
sure.
let's get started, Craig.
Okay.
Tell me about what are some of these things in this big, beautiful bill?
Okay. Well, thanks for having me, Mary.
My pleasure.
Glad to be here. So just to give a little context to it, back in 2017, we had a tax, they called it a tax cut.
Yeah.
Jobs Act. And that pretty much was a great benefit for all the taxpayers, and it reduced the income tax rates. However, the caveat to that was it was only going to last for a handful of years, and it was supposed to sunset in 2025. But our Congress and our president got together and they said, well, you know what? We don't want that to sunset in 25. We want to keep those rates continued, those lower rates, those lower income rates relative to prior to 17. So they came up with the Big Beautiful Bill, which became the Big Beautiful Bill Act,
Yeah.
which became law on July 4th, 2025. One of the beauties of this is that they retroactive most of the provisions back to beginning of 2025.
Okay.
So what we're talking about is really for this past tax year, 2025, and going forward.
Perfect.
Um,
That's what we're all paying our bills on right now.
yeah, exactly. Yep. And I think there's going to be a pleasant surprise in that a lot of people did not anticipate this. So they were having withholding and they were paying estimated taxes based on old numbers, but the new numbers are going to apply. So they're going to probably see some overpayments coming into this year
Wonderful.
in 26.
Wonderful.
Thing. Yes.
That is a good thing. And I mean, it didn't just stop there at, the income tax.
Right.
There are also some more benefits. Tell me about that.
Okay. So they're benefiting seniors. If you're 65 or older, you're going to get a $6,000 deduction per person. So $12,000 for filing joint. And then they also offered benefits to workers in the form of tip deduction,
Right.
and overtime.
Perfect.
So nice deductions.
So I have a
for that.
question. If one of the parties of the filing jointly is 65,
Yeah.
does it apply to both?
Yeah, 12,000. Yep, deduction
Nice.
against income, so it reduces their income.
That's wonderful.
Yeah.
And if we have a lot of our folks down here that are incredibly wealthy, and maybe 12,000 isn't a lot of money, but it's a benefit for sure to reduce that income.
Correct. Yes. I'll add a caveat to that. There are income limitations, so high income earners will be phased out of those credits.
Okay.
So there's different limitations, but roughly if you're making over a couple 100,000, you're going to be limited, and it's going to phase out.
Yeah, and rightfully so. Let's face it. I mean, from that perspective.
Yeah.
But what's near and dear to my heart is real estate. So talk about what the Big Beautiful Bill did for real estate.
I would say one benefit for real estate, and especially us here in Southwest Florida, is that we were limited, and they call it a SALT limitation, sales local tax deduction.
Okay.
That was limited to $10,000 in the prior law. This year, they've increased it to $40,000. So
Sweet.
I was finding when I was preparing tax returns for a number of people that had property here in Marco Island, which are paying, relatively a lot in real estate taxes.
Right.
They were limited to just deducting 10,000 of that. So now they can deduct up to 40,000 of that.
Well, when we just did a homestead session on Really Mary a little while ago and just revisited it in the January monthly market update, because, if you're here, you get to cap at 3% year over year, But let's say you buy a $6 million home.
Yeah.
Your taxes, property taxes are going to be around 60,000 because it's roughly 1% of
Right.
some
Sure.
math that works around.
Sure.
So that's 60,000. So instead of taking only 10,000 off,
Right.
I get 40,000. That's a nice savings.
Yeah. Yeah.
You know?
Absolutely.
You know, and do the math. If it's 600, 6 million, where the math works, it works out. That's amazing. Business assets. What did the big beautiful bill do about that?
It allowed us to deduct, and another caveat, anything after Inauguration Day, which was the 20th of 2025. If you purchase business assets after that date, you can elect to write off 100% of the cost in that given year.
Nice.
And the idea is to motivate the economy and motivate business owners to make investments and upgrades.
Sure. For
the
us,
assets.
it's technology, computers, routers, printers,
absolutely.
et cetera, et cetera.
Sure.
And it's only on the purchase. So if they're renting them, does that apply too?
No.
Okay.
Well, if it's a capital lease that they're going to own it, then yes, there technically could be a write-off for that.
Okay.
Yep.
That's
You're gonna buy it
fantastic.
at the end. Yep.
Qualified business owners. What in the world is that? That's part of the big beautiful bill.
Qualified business owners are individuals that are primarily, most of us, are making business income.
Yeah.
They can deduct 20%. They get a 20% deduction from their net income. So that continues. That has been in the place in the past.
Yeah.
It was set to expire, but now it's been put into the law, and it's supposed to be permanent.
Woohoo!
As permanent as Congress can be.
It's permanent under this
Right.
Congress. That could change in another time.
Correct.
So we have these 5 things. Are there other things that went into that big beautiful bill?
I think to motivate the purchase of automobiles, there's a deduction for mortgage for interest on loans for automobiles.
Okay,
Up to $10,000 a year. Yeah.
that's not bad.
Yeah. If
Right?
you're buying a new car, it's a nice deduction.
Sure.
Yeah.
All of these things, really add up when you think about
help
it.
to add up.
And if I am living full time, this is the Florida deal, not the big beautiful bill thing. If I am living in Florida full time and I've homesteaded, I still don't have any Florida state income tax.
No Florida state income tax. No.
Which is wonderful.
Yeah.
So when you look at all these things that are happening at the national level and the Florida level, now, Craig, I'm catching you off guard on this, but the governor has 5 things that they're talking about right now in this legislation about property income or property taxes.
Sure.
What say you on it? What do you think?
I think it's a great thing.
Yeah.
For primary owners. Yeah.
Yeah.
Tax deduction.
Yeah.
Eliminate property tax.
Which we
primary
don't
owners.
know if that's going to be the case or not. There's 5 things. We just talked about it in the market update in January. So if you're curious about that, you need to zoom back to that one. But when all of this is said between the national and what's happening in Florida, wow, what a great place and a great time to live.
Great place.
Yeah.
Great place and great time. I agree.
Well, until next time, we hope to see you here, buying in Southwest Florida because it is great for your taxes. And you got to go see Craig because he's an amazing accountant. So until then, I'm Mary Bartos to the Bartos Group of Premier Plus.
I'm Craig Couture, CPA from CPA Plus.
Look forward to seeing you here.